One thing which stands out is though the markets are diverse, at the same time, from an investor's perspective, I would say to some extent ignored and also definitely very under-researched. So for example, you don't have a lot of kind of international research houses covering places like Bangladesh, Pakistan, Sri Lanka, even Vietnam for that matter. Some of the large houses only cover the large caps, so they'll be covering like a handful of names. But Vietnam has got across 3 exchanges more than 1,000 listings. Right. So you have a large kind of universe of stocks to look at across our markets. So very under-researched. That's one reason why these markets can provide alpha, can provide good returns like you mentioned.
Welcome back to Alpha Uncovered. My name is Alvin, CEO of OPIM. Our special guest today is Mr. Ruchir Desai, co-investment manager of the AFC Asia Frontier Fund. This unique strategy has been allocating to the likes of Bangladesh, Georgia, Jordan, Kazakhstan, Myanmar, Pakistan, Sri Lanka, and Vietnam for over 12 years, and has recently generated over double-digit returns in just the last 2 years. Prior to this role, Ruchir was based in Mumbai, India, at a private equity firm called Hands-On Ventures, and he previously studied in Hong Kong, now holding an MBA in finance from the Chinese University of Hong Kong. Please welcome Mr. Ruchir Desai. Thanks for coming. You run an incredibly interesting fund, which we hear of often but don't come across too often. It's called the AFC Asia Frontier Fund, which is actually focusing specifically in frontier markets, as in the name. So we're talking about Pakistan, Vietnam, Uzbekistan, Mongolia, Iraq, Bangladesh, Kazakhstan, Sri Lanka, Georgia, Cambodia, Myanmar, Papua New Guinea, Maldives, Laos. And I think that pretty much covers it, right?
Yeah.
So when I look at this list, it's pretty much my travel to-do list before before I retire, which is incredible. And I think from the perspective of our audience, who are mostly institutional investors, these are typically markets that are either have tremendous country risk or inherently have really shallow markets. So it's hard for them to deploy meaningful capital. Having said this, where we are today, we're seeing a growing narrative that if we were to really see growth in our assets, we have to look outside of the G7. We have to look outside of the Western markets, and more recently, even outside of China. You have a combination of the anything but China trade, which is shifting a lot of capital deployment towards the secondary Asian markets. And then you also have increasing growth, I guess it would be like catch-up development in some of the frontier markets. So I think this is the apex of where frontier markets ought to be as we see more capital moving in that direction. So when I look at your strategy, and I'd love to actually break down as much as possible, I'm curious to see, on one hand, what the thesis is today, especially given half of these names have been in conflict zones for the better part of the last 20 years. And then secondly, how some of the allocators are responding and what the interest is like, because judging from the performance, your fund and both the underlying markets have been doing incredibly well. We're talking about double-digit returns on average for these markets over the last 5 years. So for those of us who are meeting you for the first time, maybe you can break down the strategy first, and then we can talk about the opportunities.
Sure. Thanks, Alvin. Pleasure to be here, and good to talk to you about our markets, which are obviously very unique, as you mentioned. And you're right. I mean, one thing which stands out is though the markets are diverse, at the same time, from an investor's perspective, I would say to some extent ignored and also definitely very under-researched. So for example, you don't have a lot of kind of international research houses covering places like Bangladesh, Pakistan, Sri Lanka, even Vietnam for that matter. Some of the large houses only cover the large caps, so they'll be covering like a handful of names. But Vietnam has got across 3 exchanges more than 1,000 listings. Right. So you have a large kind of universe of stocks to look at across our markets. So very under-researched. That's one reason why these markets can provide alpha, can provide good returns like you mentioned, double-digit over the last few years. Because of many undiscovered ideas, valuations are very attractive. Pretty much all these markets still trade at single-digit P ratios. All companies which are blue chips trade at single-digit P ratios. A lot of upside from a multiple creating perspective. But coming to the strategy, so in terms of the way we allocate capital or the way we decide to invest in countries or companies in this portfolio, it's a pretty simple approach. Like you mentioned, the countries in the media what's happening, say, in Pakistan or Bangladesh or Iraq might sound very scary to some people. But that's not always the case on the ground. Media kind of bloats or kind of exaggerates sometimes what's going on in the country. Yeah, sometimes it's true, but not always. And the performance numbers speak for themselves. You've seen strong returns across Pakistan and Sri Lanka and Iraq over the last few years. In fact, Pakistan is the second best performing market globally this year.
Wow.
They returned about 79%. And over the last 1 year, it's returned more than 85%, which is the best performing market globally. And this is in dollar terms, not local currency. And Sri Lanka, it's about 45% this year. And it was up 40% last year as well, both in dollar terms.
Wow.
So very strong returns out there. I'll come to the reasons why returns have been very strong in the following discussion. But coming back to our strategy, it's a pretty simple approach. We follow a top-down and bottom-up approach to our investment strategy. And when I say top-down, I think it's very important because, as you may be aware, the macro cycles sometimes swing pretty hard in these countries, like, say, for example, in Pakistan, to some extent in Sri Lanka, sometimes in Bangladesh. So you have to kind of keep your eyes and ears open in terms of what's happening in the macro cycle.
So these days when we think about macro, we think about basically US policy and its impact on emerging markets. So when you refer to swings in macro, are you referring to sort of global macro impact, or are you talking about regional?
Not so much global macro, because these countries, firstly, their exposure, say, for example, to Bangladesh, Pakistan, or Sri Lanka, to global trade or to US trade is very low. Exports as a percent of GDP is 10 to 15%, so not very exposed to the US or US policy making. When I say macro swings, I mean more domestic issues. So it could be Pakistan's current account deficit, beginning to increase from, say, for example, 2% of GDP to 3 to 4% of GDP, which leads to lower, foreign exchange reserves, pressure on the currency, and therefore central bank has to raise interest rates. Same thing in Sri Lanka, to some extent Bangladesh as well. I think we have to remember these countries, including pretty much all of Asia, they're all net oil importers and net food importers. So when you have like a major crisis like the war in Ukraine or some kind of oil shock, these countries only face a lot of pressure on the current accounts. And many of these countries have not really built up large foreign exchange reserves over the last probably 5 or 6 years because they've had some issues with the current account and policy making. And that's what you have to watch out for. And second is politics. So, the politics in some of these economies may not always be stable. We saw that in Bangladesh in August, where the former prime minister was ousted and she kind of fled the country, and we have an interim government in place. And we saw the same thing in Sri Lanka in 2022. And we saw something similar in Pakistan, beginning of 2023 as well. So you have to factor in what's going on politically as well, in terms of what's happening. For example, the elections coming up, which has happened in Sri Lanka, say, for example, hung parliament or need for coalition government, that may not have been good for policy making, which is not good for the market, like in any economy. So you have to watch out for those things. That are obviously, it was a majority government which won power in the election, which is good for the economy. So I would say domestic macro, specifically on certain issues, like I'm not talking about more important macro factors, which always drives policy making in terms of interest rates, inflation, foreign exchange reserves, and also the currency, which comes down to current account deficit. So I think these are the important factors we look for in top down, and of course politics as well. So we don't want to have allocation to a country which is kind of entering a negative macro cycle. So I'll give you a real world example. Beginning of 2022, I think it was pretty evident Sri Lanka was entering a pretty negative phase. So they had large external repayments coming up. They had 2 years of zero tourism revenues because of the pandemic in 2020 and 21. So that led them to, the foreign exchange reserves went down significantly, and they had external repayments for the dollar bonds coming up in 2022. So obviously it was pretty clear, black and white, that they're going to have issues repaying the debt, and therefore there will be pressure on the currency because they kind of held the currency very stable for the last few years until 2022. Interest rates were all-time lows. So all the macro indicators kind of didn't add up. And so we reduced allocation pretty much by half before the currency depreciated, before the crisis hit. Same thing in Pakistan. In 2022 and 23, it was going through a pretty tough time. Allocation to Pakistan anyway at the start of 2022 was not very high. I'll say less than 7 to 8% or thereabouts, not very high. So not like a game changer for the fund.
Right.
We did not even do one trade in Pakistan in 2022. And we only did like a couple of trades in buy trades. So we held on to what we had because we didn't have a large exposure. In 2022, we didn't add any allocation to Pakistan. In 2023, maybe until the first half, just a few basis points more because valuations have become very attractive. And then we began adding more once we saw the macro improving, once the IMF deal was announced, and we saw inflation would come off in 2024. Then we began adding to Pakistan in the second half of 2023. So I would say it's a combination of these factors.
So this is an example of them, taking it from a macro perspective. It's still a lot of countries to cover. So from a bottom-up approach, You mentioned, rightly so, even when we were talking to one of your PMs who ran the Vietnam fund, he was opining that, there's not enough sell-side research even for a market like Vietnam. And Vietnam is larger than some of these other markets, at least from a capital markets perspective. So when you do research from a bottom up, can you walk us through how your team runs this internally?
Sure. So coming back to the research, so when I say there's not much research from the global houses, like talking about like JP Morgan or Goldman Sachs.
But the local houses are providing
you have
enough
local
coverage.
brokers, and they have a lot of coverage. So in fact, we get tremendous amount of research from the local brokers, in fact more than enough from some markets.
Okay, that's good, So
exactly.
there is data,
it's,
right?
it's very well researched domestically. So if you want to say find out about a company in Bangladesh, I can just pick up the phone or WhatsApp the broker and find out more about what's going on. Say suppose there's some news, quarterly results are not good, or something's going on with some developments on M&A or some government policy, I can just get in touch with them immediately and they will know what's going on.
Right.
Same thing in Pakistan. You have a lot of coverage across some markets, Sri Lanka, Vietnam, Kazakhstan.
And does that require you to have a relationship with the broker as you would offshore, or are they relatively...
So I think that's one advantage of investing in frontier markets actively, because like you mentioned, investors don't have easy access to frontier markets. Yeah. In fact, just to add to that point, there were a few ETFs doing frontier markets, but they've been shutting down now. I'm not sure because of the company-related factors. So the major large ETF run by, I think, iShares just is winding down now. It was the largest frontier markets ETF. So maybe after a couple of months, say 2025, if you want to just buy a frontier market ETF, you won't have any other option but to go to an active manager. And actually, investing in active funds is the best way to, I would say not just frontier markets, I would say the emerging and frontier market asset class as a whole, because the indexes are so skewed towards a few names, a few countries. In Vietnam, it's banks. In Pakistan, it's banks and oil and gas.
Exactly. In fact, half of them are banks, right? And so if you really want the alpha, if you want exposure, say, to growing software as a service technology or into EVs, for example, you're not going to find those in the top three names.
And so you'll find like a lot of good stories, say, for example, in consumer discretionary or consumer staples or other parts of the consumption sector or telecom, or some kind of fintech company which is not in the large cap or in the index amongst the top 20 30% of the weight. That's how we find ideas. But coming back to your question about research, so we get pretty decent amount of research from our brokers. We all have relationships with them on the ground. That's coming back to my point. So for example, setting up these brokerage accounts and custody accounts and all the paperwork in these markets is not easy for anyone to do. So we've done the hard work. Countries like Bangladesh to operate, get the paperwork done, or Sri Lanka or Pakistan. It's not like opening an Interactive Brokers account. it's much more paper, lot of legwork required, and we have our middle office manager is quite busy, running paperwork through the banks and through the local brokers, etc.
So do you have teams in each of the countries, or you have team members in each of the countries helping you with middle office, or is it centralized?
No, we have a middle office manager in the office, all centralized.
Okay.
And we have a global custodian, which is DBS Singapore, and they have custody relationships in larger markets where there's global custodian available. For example, Pakistan, Bangladesh, Sri Lanka, Vietnam, or stocks which are listed in say Singapore, Hong Kong, which have exposure to our markets. But of course, some countries don't have a global custodian yet, like Iraq, or Uzbekistan, or Mongolia. And there you have to deal with the local custodian as well. So you don't have like a DBS or HSBC in these markets yet. At some point, obviously, they'll come in.
So the fund's been running for 12 years now.
Yeah, that's right.
I would imagine you have pretty deep relationships with counterparties by now. So your access to information, I would imagine, is probably amongst the best. Yeah. So I guess the next question is, when you're covering over 10 countries. So when you're looking at research, do you look at it as one region, almost like one demographic, or do you need to break it down? And the reason why I ask is because you do have a specific allocation model for each one. And so that does require you to keep a relatively, well, not equal weight, but a relatively balanced weighting for each of the countries. So how do you reconcile that between your allocation model and how you look at it from a perspective of an opportunity set?
Yeah, I think over the last decade or so, we've built up very good relationships with our counterparties.
Okay.
Got good access to information, all public information. Yeah. And also one more important part of our research process besides, getting broker research, that's just one part of it. Because those come more quarterly updates and maybe initiating coverage of various companies or some kind of company updates. But we also do our own legwork. Obviously, we analyze the company using the financial statements, do the peer comparisons compared to domestic comps and also international comps, regional comps. And what are the key factors why we think this company is good and why we're convinced on in terms of not just valuation, but for example, its business model, its competitive advantage, can it sustain these advantages, what about the ROEs, the cash flows, and also the long-term profitability. And also, one more part of the research process being on the ground on regular. I was just in Sri Lanka last week, post-elections. So we are on the ground pretty much every quarter. Thomas was in Pakistan in October, just a month ago. I'll be in Vietnam next year as well. So I think that's, more than sitting on Bloomberg and looking at balance sheets and P&L statements and talking to the brokers or reading the research, being on the ground is very important. You get a very different, for example, Sri Lanka, we all know positive things are happening in the last 1 year or so. But, being on the ground really gives you a different feel. I've not seen such optimism in the country for the last 5 years. Every corporate I met, every bank I met, which are listed, they all gave me a very positive outlook, which was not the case. So you don't get that by being on a Zoom call.
Yeah.
And you see, for example, Sri Lanka is very dependent on tourism. When you land at the airport, you see the airport is packed. So that's a very good indication. You see the restaurants and bars and hotels also crowded. So very good indication that things are recovering in the country. So these are the kind of indicators you look for and you get when you're on the ground. And that's a very important part of our research process.
Well, it sounds like early days of Asia, actually, as it was coming into the boom. So let's talk about demographics. Let's start with Sri Lanka. You mentioned that a couple of times.
Yeah.
We have kind of a restabilization in the government. Policy seems to be moving in the right direction. Why don't you walk us through the demographics for one, and then the policies that make you excited about this region?
Yeah, so in general, broadly, the demographics in our markets, the story here is pretty similar to emerging markets in Asia, like in India or Indonesia or the Philippines. So you have a large young population. Say, for example, in Pakistan, you have a population of 250 million people with an average age or median age of about 25, very young population. Yeah. Bangladesh, you have a population of 165 million people, again, median age of about 25 again. Vietnam, as you know, 100 million people, slightly older population, close to 30 in terms of median age. So you have a large population out here. And of course, even smaller markets like Sri Lanka or Kazakhstan, they have populations of 20, 25 million people, which is small, but at the same time, there are different factors driving these economies. So Sri Lanka is not just demographics, it's also the tourism sector or the trade and logistics, because of the country's geographic location is very strategic. It's just, between the sea lanes of east and west. So the demographics are very favorable for our markets from a consumption point of view. So you're seeing a lot of opportunities, like I mentioned, say in consumer discretionary. So those could be consumer appliances, automobiles, or consumer staples like, food and beverages, etc. So from a demographic perspective, the opportunity also is very large, but that story is similar to what you see in emerging markets in Asia, and the coming off a low base as well. But besides the demographics, other factors which make me excited about these markets is, for example, the global supply chain shift, right? Especially post the trade tensions between China and the US since 2018. Vietnam has been the key beneficiary in Asia from the global supply chain shift. You've seen tons of foreign direct investments come in the last 5 or 6 years, $20 billion a year going into the manufacturing sector, which is all meant for exports. You've seen Vietnam's exports basically grow exponentially over the last decade or so, especially to the US. So Vietnam's exports to the US in 2017 was about $42 billion. And last year in 2023, it was about $100 billion. So it's doubled basically, more than doubled in about 5 years.
Wow.
So that's because of the global supply chain shift and benefiting from this China plus one strategy.
Yep.
Bangladesh, second biggest garment exporter globally for China.
Second biggest?
Garment exporters.
Oh, garments exporter.
So they do t-shirts, trousers.
Right.
So you walk into any M&S here in Hong Kong,
right,
pick up a shirt or trouser, it's going to be made in Bangladesh.
Yeah.
And that wasn't the case maybe a decade ago. You would still see made in Vietnam or made in Cambodia. Of course, you still see a bit of that. But now the second biggest garment exporter globally after China. So they're exporting a lot, obviously, to the US and Europe, which are the biggest markets.
Yep.
And also benefiting from the China plus one strategy for the last decade or so. Yes, you've seen a lot of Chinese companies or manufacturers which are focused on China move factories into Bangladesh.
Right.
So you're seeing that in our markets as well. Even in Central Asia, for example. Central Asia is not really a China plus one strategy, but they've seen a supply chain shift / kind of human resource shift post the war in Ukraine. Mm-hmm. So what we've seen in the last probably 2 years, especially 2023 and maybe first half 24, you saw many people, a large part of the population from Russia and Ukraine and even Belarus move into countries like Georgia and Kazakhstan, Uzbekistan. So you've seen those people come in, you've seen remittances really shoot up, say for example in Georgia and Kazakhstan. Also these countries are part of the land supply chain route from east to west. And earlier these supply chains used to go via Russia. But because of sanctions or high insurance costs, companies trying to reduce risk, they're moving via, say, Kazakhstan and Georgia now. Because Georgia also has the Black Sea port.
Right.
So in fact, I would say Georgia is benefiting the most from the supply chain shift in that part of the world, in Central Asia, because they have access to a Black Sea port, so like Russia. They're seeing a lot of cargoes move from west to east, from Georgia into the Black Sea and then via into Turkey, etc. So that's really helping them a lot. That's also happening. Let's talk about Vietnam and Bangladesh, but what many people don't realize is Georgia has benefited a lot from, the war in Ukraine from a supply chain perspective. It's a small economy, but the GDP growth in 2023 was 10%.
Right.
Which is, and primarily because of rising exports, rising remittances, rising tourism,
Wow.
people moving there, people shipping goods via the Black Sea port of Georgia.
Wow.
So 10% GDP growth of a low base, pretty high. So this year they've done 9% GDP growth. Everyone thought 2020 was a high base.
Yeah.
Central bank was forecasting 5-6%. They've done 9% so far in the first 9 months of the year. Again, because of rising trade and rising tourism. So they're just absolutely going gangbusters in their economic growth because of the supply chain shift. So that's another trend happening in our markets. And one more reason why the markets have done so well for us, our markets have done well for the last probably 2.5 years, is many of these economies faced a huge crisis in 2022, post the war in Ukraine. I'm talking specifically about Bangladesh, Pakistan, Sri Lanka. I would say these countries faced existential crisis. For them, it was existential. It wasn't just a current account problem, a balance of payments problem. You go to the IMF and you're done. This was not just about balance of payments or a current account or macro issue. It was politics, social, and macro as well. So everything combined together, it was the worst possible kind of situation for them. And because of that, 2022 was a tough year for the economy, for those markets. But that was the bottom. So, for example, again, coming back to our process beyond the ground, I was in Sri Lanka end of 2022 after the crisis. It pretty much seemed like the bottom because there was some tourism coming back, things were normalizing on the ground. I spoke to some of the companies, things are kind of bottomed out. And valuations, Pakistan, I remember in early 23 was trading at like 3.5 times P ratio. Sri Lanka was at 4 times.
Wow.
Bangladesh also very cheap. So these multiples were probably never seen before. So, on certain occasions, you have to take a view that, okay, this is pretty much the bottom. And then you slowly start allocating to these countries because macro has turned the corner. And then we've seen the outcome of that. So obviously you can't expect all the positives to happen in a couple of months. The market looks for incremental positives. So we've seen, for example, in Sri Lanka's case, interest rates peaked out mid 2023. Inflation started coming off in June 2023. Central bank began cutting interest rates in the summer. The market started rallying.
Wow.
Then you had the IMF deal, following through. You had the debt restructuring following through. You had earnings coming back, tourism coming back. So the market's just taking these incremental positives because valuation was so cheap, and it's rallied by up, like I said, 45% this year, 40% last year in dollar terms. Pakistan as well. Even domestic investors have given up on the country. I remember last year, I would say June 2023, they were close to default.
Wow.
And domestic investors were so negative on the economy. We were buying a little bit in the first half of 23, but not so much because we also need some more conviction on the IMF deal. And immediately when the IMF deal was announced in June 23, you saw a bit of a rally, and a bit more probably towards the end of 2023 when investors anticipated the interest rates had peaked out, inflation had peaked out. But the big rally has come only this year because you had these incremental positives come together. The IMF deal, relative political stability, and inflation coming down significantly to single digits, which has led to the central bank in Pakistan cut interest rates by 700 basis points in the past 5 months. So that's the biggest part of the rally has come basically in the last 6 or 7 months. So that's like 80%. Most of it has come in the last 5 or 6 months.
So when you deploy capital here, most of it is in equity. It's long biased or long only.
Long only and listed equities only. So yeah.
Okay.
So we buy and hold. So our portfolio turnover was very low, less than 20%.
Wow.
So we're not looking for a new idea every month or every quarter.
Right.
Or if a stock goes up 35% or 50% in a month, doesn't mean we want to sell it and buy something else. I mean, you have to have more conviction. We are looking for multi-baggers.
Yeah.
And the reason why performance has been strong over since inception, especially the last 2 years, is because we had many multi-baggers in our portfolio. Not stocks doing 10, 20%, but stocks doing, we have one stock which is at, I think 40 or 50 rupees in Pakistan. And just probably a year ago now, it's at 200 rupees.
Wow.
So it's 4x.
So when you look for these companies, some other managers who I've spoken to in the past have made a tactical decision to deploy only in the relative large caps in each of the countries, just due to the capacity constraint issues. Are you deploying a similar type of approach, or will you move all the way down the risk curve?
So our strategy is very diverse, and we're open to companies with a market cap of $25 billion, which we own, which is a fintech company, Kazakhstan, called Kaspi, to companies say in Vietnam or Mongolia, which have got a market cap of $50 million.
Right.
But obviously it has to make sense to us. At the same, having said that, we have a core portfolio which is predominantly large caps. I would say predominantly 80% of our portfolio in these economies or in these markets is exposed towards large caps and blue chips. And it's not because, one reason of course because they're more liquid and maybe you have better access to information and they're blue chips, so better to understand. But also the valuations are so attractive, right? So you have blue chip companies, for example, MNCs like Colgate Pakistan, Colgate Palmolive Pakistan, trading at 15 times. 15 may sound high for Pakistan, but
But it's a growth region.
it's a growth region.
actually
And then the earnings are growing by 10-15% a year.
Wow.
And the stock has corrected. Or you have blue chips in Sri Lanka, which are well-established, strong management teams, good corporate governance, trading at 7 or 8 times. And these are the blue chips of these countries, like for example, doing oral care or consumer goods, consumer food and beverages. Strong brands have been around for like the last 35, 40 years.
Are those leaders typically in the discretionary consumer space, or?
No, I would say pretty much across the board. So I give you examples of consumer because that's, our demographics are very attractive.
Right,
and you
right,
have
right.
strong, very attractive valuations for these companies, for these blue chips. But you have
7 times is incredible.
Exactly. So you have attractive valuations in the markets. You're getting pretty much all the blue chips at Colgate Palmolive Pakistan is one example, which is 15 times, but other stuff is sitting at 10 times or less or thereabouts. So you have very attractive valuations. But you have these stories across the board, not just in consumer staples or distress. You have them in, say, banking or telecom or fintech or other consumer goods. So it could be cement, for example, which is quasi-consumer.
Right. Industry/consumer.
And one reason is Sri Lanka, Pakistan, Bangladesh, Central Asia, so Kazakhstan, Uzbekistan, Georgia, this region.
Right.
Because of the fact that they're not so exposed to US trade or US policy. Like I mentioned,
okay.
exports as percent of GDP.
Right.
For Pakistan is like 10% of GDP.
Wow.
For Bangladesh is about 15%, Sri Lanka about 13%, and in the 20s or 30s for Central Asia like Kazakhstan, Uzbekistan, Georgia. It's not very exposed to US trade or US exports.
But in terms of investment capital, where is the capital coming from? Is it domestically sourced, or is it foreign sourced from the region, or is it US money that's going in?
Yeah, so most of our investors are predominantly high net worth individuals and family offices based in the US, that's one, and also in Europe, so Western Europe. So that would be Switzerland and UK.
Okay.
Predominantly in those geographies. Then we also have some family offices, say in this part of the world, in Hong Kong and Singapore, or some high net worth individuals in Dubai or UAE.
Right. That makes sense because Western Europe, Asia, I mean, it wasn't so long ago that we saw similar growth here. So deploying capital into these regions makes sense. But what about locally? Where is the capital coming from locally? Are the governments raising, is it debt driven? Is it FDI? Is it IMF deals that's driving capital into?
So the capital into the stock market, say for example in Pakistan or Sri Lanka or Bangladesh or even Vietnam for the matter, it's predominantly domestic investors. So when I say domestic, it's domestic institutions like mutual funds or pension funds or domestic retail investors. So you've seen domestic retail investors explode in terms of account openings in Vietnam over the last 5 years. It's gone significantly high. So they are the ones who drive the volume and drive the market and drive the sentiment actually. So actually it's very important for our strategy, I would say in general in emerging markets and frontier markets, to have a feel of what the domestic investor is thinking and what he's kind of not going to do, but what his thoughts are and how the sentiment is. Because domestic sentiment plays a very important role in these markets. For example, if you see a big move up or down in Pakistan or Vietnam or Bangladesh, it's because of domestic sentiment or something happens domestically, not because, say, a BlackRock is selling or some other foreign fund is selling.
Right.
So it's driven predominantly by domestic investors, institutions and retail. And that's where the capital is coming from. And a very important trend, I would say it's pretty much similar across global markets, including developed markets, where the interest rates are coming down aggressively. In a way, the interest rate cycle of the last few years in our markets has been very kind of skewed. They raise interest rates so aggressively. Of course, that was for the good of the economy. So especially when the US Fed was aggressive in 2000.
Everybody has to be aggressive.
Yeah, but these guys are more aggressive.
Right.
It's not like raising interest rates by 4 percentage points.
Right.
Pakistan went from 7.5 percentage points in September 21 to 22%.
22%.
In June,
That's incredible.
In June 2023.
Wow.
Sri Lanka went from 7% to 14% in a matter of months. Kazakhstan also is raising rates aggressively. I think they raised by 5-6 percentage points. So did Georgia. Georgia not so much. But you had a very aggressive interest rate hike cycle from these economies. In a way, it was helpful to stabilize the economy, stabilize inflation, stabilize the macro, so that the fruits of that hard work, all those tough decisions are paying off now for the economy.
Right.
And I'm not talking just about stock market returns. Yeah, stock market is doing well because interest rates are coming down, and a lot of domestic investors are taking capital from their fixed deposits, which have got low interest rates now, or from their fixed income investments into equities. So you're seeing that big shift happening, and that's one reason why you're seeing a rally in Pakistan and Sri Lanka. Many of the investors have no other option. Maybe real estate is an option, but equities is the most liquid option right now, besides fixed income. And
so I guess from that perspective, they are very much influenced by US macro. I mean, if the Fed raises rates again, then the emerging markets have to raise rates as well. So it is affected. It's just not from a
I would say
trade
it's
perspective.
affected from that angle. But I think what you saw in 2022 was a combination of negative factors come together. You had an aggressive Fed.
Right.
You had the war in Ukraine impacting oil prices, food prices. These countries are net food and fuel importers. So many of these countries, especially in South Asia, Bangladesh, Pakistan, Sri Lanka, they went into 2022 on a pretty weak economic footing. So they had it easy. Post-pandemic boom, interest rates were so low across the world. Stock market was doing well, companies were doing well, economy was doing fine. How this rebound, post, reopening of the lockdown, rebound. And I guess the governments got complacent. And then they didn't prepare for something as bad because they already had the pandemic, right? So no one anticipated that you have another major global event like the war in Ukraine. And at the same time, the Fed being so aggressive. So I think if the Fed was, if you didn't have the war in Ukraine, hypothetically, and you only had the aggressive Fed, maybe they would not have to raise interest rates so aggressively. And also, you can argue that the Fed would not also have to raise interest rates so aggressively if there was no war in Ukraine.
Right.
So they have gone from 0 to 5. They've done 0 to maybe 4% and 0 to 5.5. But yes, if the Fed does raise interest rates, for example, hypothetically, the next couple of years, the cycle turns. I think this time it's a bit different for these markets because I'm assuming that there's no other major global crisis like a pandemic or a war. We just have a normal interest rate hiking cycle. I think these countries are a much better place now because they've experienced the worst, in 2022, and they're much better prepared now. Like I said, they've done all the hard work now, and the hard work is paying off now. So they have foreign exchange reserves are much stronger. The current accounts have come off significantly. Most of them are surpluses now. The current account government is doing reform. Like I said, 2022 was so tough for these countries. They have no choice but to reform now. Because I think what happened in Bangladesh or Sri Lanka, even Pakistan, with the social revolutions or social protests, etc., I don't think many governments want to face that again. So they've learned the lesson the hard way. So I think it's similar to 1997, many Asian economies after the Asian financial crisis like Southeast Asia, they had no choice but to reform. So you're going to see similar kind of process play out in, say, Bangladesh, Pakistan, Sri Lanka. And that's why I'm so bullish on them going forward. Yeah.
Okay. Yeah. So a lot to unpack here.
Yeah.
Bangladesh, Sri Lanka, Pakistan.
Yeah.
You mentioned that it's like Asian financial crisis for them. And so the resurgence coming out is not that dissimilar to like 95, 97 era as it was for, say, Thailand, Malaysia, Vietnam, Hong Kong. When you look at the path forward, is it a manufacturing, consumer, discretionary, or do you see pockets of innovation, for example, such as technology?
Yeah.
Everyone in the West is kind of enamored with the AI semiconductor push right now, but you have incredible growth here across the board and more evenly in emerging markets. And I wouldn't call them traditional markets, but there's a modernization that's happening here. So tell me what you're seeing on the ground in this particular space from a growth perspective.
Yeah, so it really depends on the country and the way they're positioned.
So pick
Sri Lanka, for example. I think their focus is not so much on manufacturing exports like, say, Vietnam or Bangladesh. I mean, like I mentioned earlier, tourism is a very important industry for Sri Lanka. It's about 5% of GDP. So they get in about, on a normalized basis, about $4 billion a year. So that's very important for them. And they can even grow that even further. So they'll do about 2 million tourists this year. 2 million tourists is nothing. Cambodia, pre-pandemic was big, 7 million tourists, much smaller economy, much smaller country. So Sri Lanka is focusing more on the tourism sector, I would say. That's where their focus is going to be for the next 5 years, to bring this 2 million to maybe 3 or 4 million tourists, which will be very positive for the foreign exchange reserves in terms of building up that buffer. Secondly, also trade is very important for Sri Lanka. Their geographic location is fantastic. It's right, in the middle of the sea lanes between east and west. So the port of Colombo, not many people will be aware, the port of Colombo is the busiest port in South Asia.
Wow.
So Sri Lanka is not a small economy, but the port of Colombo handles about 8 million containers a year, which is about half of what India handles in a year.
That's incredible.
So, and most of these 8 million containers that Sri Lanka, the port of Colombo handles is transshipped into India, about 80%. So basically Sri Lanka or Colombo is becoming a very important transshipping hub for India and also South Asia, so Pakistan, India, Bangladesh, etc. And this capacity will go to about 11 million containers in the next 2.5 years. And whatever capacity comes up is being taken up immediately. So they operate at close to 100% capacity utilization. So it just shows you the potential for the government or for the country to further leverage this geographic location.
Interesting. So it's interesting we're talking about this because some investors are not taking a step back, but more in hold position for India, because it's been so hot for so long. And so what you're seeing is actually other countries that are linked to the Indian economy that are benefiting from this, not just from a China plus one, but also shifting global supply chain. But as India continues to mature, these secondary markets actually have their own catch-up play, which you could almost position them as leverage beta on India.
Sri Lanka is by far totally leveraged to the India story. And they've kind of realized that. Because if you look at what happened in 2000s, when China was doing very well economically, a lot of the ASEAN countries, Southeast Asia, Singapore, Malaysia, Vietnam, Thailand, Philippines did really well, right? From a trade and tourism perspective, Vietnam and Thailand see so many Chinese tourists across the board. Trade investment picked up from China into these countries. I think give it 5 years, or take a 5-6 year view from here. I think Sri Lanka is kind of in the same kind of boat right now.
Wow.
So tourism, India is 20% of tourist arrivals. So the biggest tourism market for Sri Lanka is India. It's about 20% of arrivals. Like I mentioned, Port of Colombo is basically a quasi-Indian port.
Wow.
Majority of transshipment is to India. So if you take a view that India will do 6% GDP growth over the next 5 or 6 years, Sri Lanka is totally leveraged to the India story. And I think the government realizes that. And so they're going to balance the foreign policy between China and India. But they realize that India is so close to the economy from a tourism and trade perspective, from an investment perspective. So I think that's why I'm so bullish on Sri Lanka, not just because of the India story, but also they've got all the important tick marks have come together. You've got political stability, economic stability, the IMF deal, third review is in place, the debt restructuring is complete. So everything has fallen together in the right way, and they're very leveraged to India. So I think Sri Lanka is a very good story for the next 4 or 5 years.
Got it. So takeaways, Sri Lanka, coming out of debt restructuring, political stability, you have areas like tourism, logistics sounds like it's a big part of the story, and it's a leverage play on India. Let's pivot a bit over to Central Asia, because you mentioned that as well, which I'm quite curious because of its proximity both to obviously Russia, China. And for myself, I spent a little bit of time in Romania, probably about 12 years ago. And at the time, it was struggling to find itself. But what I've heard is countries like Romania, Moldova have benefited incredibly from the actually Russia-Ukraine war, as a lot of the facilities have moved outwards and logistic ports, call centers, etc., have moved more towards the Central Asian and Eastern European countries. What are you seeing now? So you mentioned Kazakhstan, Uzbekistan are benefiting, and Georgia are benefiting incredibly. And this is a big part of migration as well as capital flows. I'm sure tourism is also picking up there as well. Places like Kazakhstan have been traditionally very agri-centric. What other parts of the economy are you starting to see transform?
Yeah, so in general, like I mentioned, Georgia has benefited the most from this whole conflict/war in Ukraine. From a supply chain perspective, a lot of the goods are moving via the ports in Georgia, via the Black Sea into other parts of Central Asia and also Turkey. And like I mentioned, there's 10% GDP growth for the last 2 years now, very strong because of rising exports, rising tourism, rising remittances. Right. And probably same thing for Kazakhstan and Uzbekistan. But I think Kazakhstan and Uzbekistan are also slightly more diverse economies. I mean, Kazakhstan has some amount of dependency on oil and gas. But it's pretty diverse from that perspective, from an investment universe perspective, because the companies we hold in Kazakhstan, which are, by the way, listed in London and the US, so very liquid, easy to buy them, easy to buy and sell, compared to, say, opening an account in Kazakhstan. These companies are not linked to oil and gas at all. These are, for example, a bank, a fintech company, and an uranium producer. So the fintech company we own in Kazakhstan is called Kaspi. And everyone talks about super apps in, say, India, or like Paytm or Grab in Southeast Asia, or GoTo in Indonesia, etc. These guys are not hardly making any money. But Kaspi is a fintech. They are the ones who actually, people in the fintech industry know about this name, but investors in general don't know, because it's a Kazakh company which is now listed on the NASDAQ just earlier this year. A market cap of $20 billion.
Wow.
20 billion, so it's not a small company. When I tell people that you own a fintech company in Kazakhstan with a market cap of $20 billion, they're also surprised. And this company is profitable. The net profits this year will be $2 billion.
Wow.
From Super App.
Oh,
basically, these guys have cracked the model.
Wow.
So they're doing digital payments. They're doing...
so I'm thinking like the WeChat of Central Asia.
It is. In fact, the user base, I'm getting a bit technical here. For example, the daily average users, the DAU, which is daily average users to MAU. So DAU divided by MAU is, I think, second or third highest globally, just after WeChat.
Wow. So second highest globally?
Highest, after
in
WeChat.
Kazakhstan?
Second or third. So after WeChat and Alipay, I think this is the most used app globally. So everyone in Kazakhstan uses this app. Like I said, Kazakhstan's population is 20 million people. But this company makes a net profit of $2 billion.
Wow.
Everyone is using this for P2P payments, for online shopping, for even government services. You can even get your certificates online via this app. You can book tickets, you can book your vacation. So it's an all-in-one app. You can do pretty much everything on this one app.
Wow.
And everyone is using it. I think their average transactions per user per month is
Surely
pretty
they
high.
must service other regions other than Kazakhstan, because Kazakhstan is only 20 million.
Yeah, so that's
it's
the next-
second most
that's the-
widely used app.
Yeah, that's-
Surely you must be covering more than 20 million people.
That's the next leg of growth for them. So that's obviously questions investors have about this company, because there's only so much you can grow in Kazakhstan. At some point, they have to look for other avenues of growth. So they've recently acquired the second biggest marketplace / e-commerce company in Turkey. And Turkey also kind of, I think, is a bit of, I don't cover that market actively, but from what I've spoken to Caspia and listened to their investor presentation, it seems like Turkey is also an underpenetrated market in terms of e-commerce and digital payments, etc. And also it's a large market, right? I think population is pretty high compared to, say, Georgia, which is 3 million people, or some of the other Central Asian economies. And it's closer from culturally also. I think Kazakhstan and Turkey is quite close. So the company made this acquisition just a couple of months ago. So that could add to their growth going forward. And they can take that execution model to this new economy.
Got it. Yeah, that makes sense. It's not that dissimilar to what mainland Chinese companies were doing with Southeast Asia. They would take their technologies and basically replicate the model.
We also see, for example, we also own a bank in Georgia.
Okay.
Again, we own 2 banks in Georgia. These is basically 2 large banks. It's like a duopoly in Georgia. Both have like 40% market share of the banking sector. But both these banks are listed in London. So again, very easy to buy and sell, good access to information. But this bank in Georgia called TBC Bank, again, one reason why we like it is not just because of the Georgia story, it's because they're one of the first movers into Uzbekistan. When I say first movers, I don't mean in terms of traditional banking, but they're the first ones to kind of do a digital bank in Uzbekistan. So they are a digital only bank in Uzbekistan, doing very well. Earnings are growing. It's a profitable venture already. I think it contributes close to 10% of the company's overall profits. I think the Uzbek operations itself will do about $40-50 million in net profits this year. It's not a small number.
No.
And this is just through digital banking. So for example, online loans, unsecured credit, they go into debit cards, they get into credit cards now. So it just shows the opportunity in a place like Uzbekistan as well. The economy on the ground is doing very well. So we have these companies which capture that growth as well. So that's one reason why we like TBC Bank. Not just Georgia, but the Uzbek business is doing very well.
It sounds like you don't have to go down the risk curve too much, actually, to get these 4 or 5 baggers.
Yeah, exactly.
Right?
I think more important in our markets, like I said, the top down is more important. I would not say more, but it's also equally important. So you have good companies in all our markets, fantastically well-run, good management teams in Pakistan, in Bangladesh, in Sri Lanka, Kazakhstan, and Georgia. Very good management teams, very open, transparent, solid ROEs, 20% plus, trading attractive valuations. Like I said, single-digit PE ratios at the most in double digits, 13 or 14 times, growing earnings, 10, 12% annualized in dollar terms. So the issue is not with the companies. The issue is what happens, what goes wrong, or where there are issues sometimes is on the macro, right? So you have a Pakistan, right? It goes through boom bust cycles. Yeah. So, for example, they had an IMF program in 2008, in 2013, in 2019, and now in 2023. So you have these kind of cycles in some of these economies where the companies are great. And the good thing is, some of these companies, they survive when they actually grow and do well. They thrive despite what's going on the ground. So all these, the companies you own in Pakistan have been around for the last 30, 40 years. They're not some new fintech company which started a couple of years ago. They've been around. They know how to manage in this kind of economy, in this kind of environment, within the boom bust cycles. Right. Same thing, for example, in say Sri Lanka, they had a tough time the last 5 years, but companies have survived. They're fantastically well-run companies. And the same thing in Bangladesh. Why I'm bullish on these, especially these 3 economies in South Asia, is because you have very good companies, very strong fundamentals, very attractive valuations, and now the macro cycle has turned in their favor. So they had a tough time last couple of years. I think they're getting that together now. So if you have, for example, 2-3 years of stability, stable growth, I'm not talking about gangbuster 5, 6, 8% GDP growth, even 3-4% GDP growth in Sri Lanka, stable politics, stable economic policies, the multiples re-rate. I think investors like the companies. I think once they see stability coming back, Sri Lanka, the whole market used to trade 15 times in 2014, and now it's at 9 times. So multiples have got de-rated. Banks used to trade price to books of 1.6, 1.7 times, now at 0.7 times, got derated. So you're going to see the multiple re-rating happen. So the returns over the last 2 years have been driven by, in general, macro stability, interest rates coming off, earnings seeing a rebound. I think 2024 onwards, especially next year, the returns will be led by the multiples re-rating now, going forward.
Got it. So when you look at, I feel like I've seen this story a couple of times, both in Thailand, Southeast Asia, I've seen it in China, obviously. Now it's happening in these two big buckets, right? Central Asia in particular, Bangladesh, Sri Lanka, and Pakistan. These runs can go multi-year.
Absolutely.
It's like a generational opportunity.
Yeah, absolutely.
So I find it's almost a silly question, but I have to ask, right? How does it look for the next 3 to 5 years?
Oh, I'm very positive.
Incredibly
very
bullish, must
Yeah,
be. Yeah.
absolutely. Because like I said, many of these countries got hit so hard in 2022.
Yeah.
And everyone was, even like I said, domestic investors in Pakistan or Sri Lanka was so kind of negative on the market. Yeah. So much of capital, even domestically, has moved out of equities. And you had, a couple of tough years, especially in places like Sri Lanka or Pakistan or Bangladesh. And you had basically hardly any growth, hardly any investments, or gap cycle or the investment cycle has been kind of depressed. That's coming back now. And it won't come back just for 1 year, right? Because you have, like I said, the important factors come together: lower interest rates, macro stability, better politics, more reforms. Cycle will continue for the next couple of years. So that's why I'm very bullish on, especially South Asian frontier markets and of course Central Asian frontier markets.
Correct.
Which they didn't have a crisis like South Asia, but the valuations are attractive. And one more point to add about Central Asia, I think geopolitically, given you will have a new president in the US who wants to kind of end conflicts, I don't know what kind of deal is going to happen for Ukraine and Russia. I'm not that much of an expert on that foreign policy perspective, but the indications that something will happen next year, Trump becomes president. And I don't know whether it's going to be a good deal or a bad deal, but eventually if you have some kind of solution on that conflict or that war or the issues between Russia and Ukraine, Central Asian companies listed in London or US or in general Central Asia, their multiples got derated. There was a geopolitical discount post the war in Ukraine. For example, Kaspi,
right,
before the war in Ukraine, used to trade at 20 times P ratio. Now it's at 10 times.
Wow.
TPC Bank and Bank of Georgia, they always low 6 times price.
But the growth is there.
The growth is
yeah,
there. And
these are
the growth
incredible value.
The growth these guys are showing is stronger than you see even in
So we're actually still in a very GARP
Absolutely.
cycle right now, right?
Exactly.
Growth at a reasonable price.
Yeah.
So we haven't even reached the point where you have institutional or foreign investors flooding the market and further causing a re-rating. It's still domestic. And do you hedge out your currency?
No, we can't, because sometimes it's
right.
expensive. And that's why we've got to get the top down right. Because you don't want to be having, say, 20% exposure in Pakistan or 20% exposure in Sri Lanka, and the currency goes...
The hedge would be so expensive anyway.
The currency depreciates by 30-40%, so you lose 30% just on currency.
Yeah. So how do investors react when you tell them, yeah, we don't hedge, this is the country risk you take? Do most of them turn away, or do they understand? Because this is more of a marketing issue, I find, especially with North American investors. A lot of them from the old world prefer and even demand that the currencies are hedged, right? You take a Korean manager, for example, right? Especially with, as of the time of recording, there was martial law declared last week. Suddenly investors are calling the managers and saying, look, I need you to be hedged in the next 2 weeks, right? I mean, something like a coup or a political restructuring, IMF deals, it happens almost on a regular basis. So there's no way you could possibly account for that in a currency.
So I think most investors understand, and that's also reflected in the way we explain our strategy. Like I mentioned to you as well, top down, we try and get the allocation right. We have our eyes on the ground, we know what's going on, so it's not like we're new to these markets, doing these markets more than 10 years now. So we know what to look for, look for red flags in the macro indicators, for example. So it's not rocket science, especially in some of these markets. The key factors are current account deficits increasing significantly, or them trying to protect the currency, the currency being very stable for many years. Like that was the case in Pakistan pre-2017, Sri Lanka 2022. These are the kind of factors we look for.
What's the fund AUM now?
It's still, I would say, on the smaller side, about less than $20 million, about $17 million.
Okay.
But we're seeing AUM come in now. I think a lot of investors, 2022. I would say frontier markets have had a tough time in general from 2018 to kind of 2022-23.
Right.
You saw some of these ETFs shut down, frontier investors.
I'm surprised they shut down, because the performance must have been incredible.
Not until maybe 2023, right?
Oh, I see. Okay.
So I think some of the frontier markets took a big hit in 22. And I think a lot of capital has moved to the US, right? Because US is outperformed, and it's not just about frontier. It's
they outperform everything.
Yeah, so even if you're like in India, it's outperformed India as well.
Yeah.
Of course, India's a good. I'm not saying it's not a good story, but I'm saying just the bigger picture is that a lot of capital has moved from frontier and emerging markets into the US, and that's one reason why frontier has kind of, it was anyway not researched. I would say it's more ignored now, and I would say this has been the best time to invest in frontier markets, or especially Asian frontier markets, because domestically also things were depressed from a domestic investor sentiment perspective. Globally, they've been ignored, but they're coming back now. So I think you got 2 years of strong performance.
Yeah.
I think now that investors see, for example, things turning around in Sri Lanka and Pakistan and maybe Bangladesh in 2025, they'll probably come back to these markets.
So tell me a little bit about yourself. You actually studied at CUHK here in Hong Kong.
Yeah.
Back in 2013.
2011. Yeah. So I came here
2011,
first in 2011 for my master's, my MBA in CUHK, it's Chinese University of Hong Kong.
Okay.
And I've been here now for 13 years. So my first job after my master's was with AFC, with Thomas. He was just starting his fund, and I was very excited about these markets. And I joined him, and it's been a very good ride actually since then. I've got to explore various countries. I've been to pretty much most of these, I would not say exotic, but most of these frontier countries. Right. Bangladesh. I've not been to Pakistan. I would love to. I'm on an Indian passport, so it's difficult to kind of get there.
Sure.
So I sent Thomas over there. But yeah, I've been to Pakistan, Sri Lanka, Kazakhstan, Uzbekistan. Of course, Vietnam is quite common. But I've been to other Southeast Asian economies. And I know what's kind of going. I mean, I've been to Thailand, Indonesia, Philippines. And I would stick my neck out and say the investment story, investment case, or the consumption growth story, say in Pakistan or Bangladesh or Sri Lanka, to me, besides being undiscovered, under-researched, is more exciting than, say, a Philippines or a Thailand at this point in time. So I think these are the opportunities that are out there which are undiscovered. So
I was about to ask, Thailand's not on your list. And Thailand, more recently, despite the political, I wouldn't say it's unstable, but there's always some shifting narrative there, some drama. It's quite vibrant. I mean, I was there 6 months ago. It seems like it's also benefiting to some extent from the China Plus One and the supply chain redeployment. So why wouldn't you include Thailand in your list?
Yeah, so we, as the name suggests, we're Asia Frontier Capital. So we do only frontier markets. Okay. And also as the fund is AFC Asia Frontier Fund. So the strategy is only listed equities in Asian frontier markets.
Okay.
So the way we look at it is we invest in all the Asian frontier countries which are part of the MSCI Frontier Market Index. So Bangladesh, Pakistan, Sri Lanka.
That's right.
Vietnam, Kazakhstan.
Got it.
Some of the Middle Eastern economies like Oman we could also do, or Jordan. And then stuff which is frontier but not on any index like Mongolia or Iraq or Uzbekistan or Georgia.
Have you been to Mongolia?
Not yet, but Thomas has been there. I might go there next year.
Yeah.
So I predominantly spend more time covering the larger markets. So Bangladesh, Pakistan, Sri Lanka, Vietnam, Kazakhstan. I've been to Myanmar. I was in Myanmar just 6 months ago. So some interesting things happening there also. You never know what could happen over there politically. So you could see it all around next year in Myanmar. So we have some exposure to Myanmar in a very small way by Singaporean companies.
Do you track sort of this narrative with BRICS and de-dollarization, polarization away from the US, SWIFT, non-SWIFT, and what are your views about it?
Yeah, these countries are very dependent on the US dollar for US dollar trade. So
I was about to say.
So they don't want to get clubbed into any kind of pro-US or, not pro-US systems and stuff like that. So they're dependent, especially countries like Vietnam. I mean, there's no way they can kind of antagonize the US from that perspective. And the other countries also, they want to have a good relationship with the US and China and India and the other global powers.
I asked because you mentioned earlier that most of these countries do not have a direct trading relationship with the US.
Well, let's say direct, it's not large. For example, Vietnam.
It's only 10%, right?
Vietnam's exports to the US is 25% of GDP.
Right.
But Pakistan's total exports, not just exports to US, total exports as a percentage of GDP is 10%.
Right. So, yes, I would meant exactly.
So
Bangladesh is own 10%.
It's not like the US is the biggest export market, but it's not like the key driver for the economy.
Exactly.
So, for example, if Trump makes a hassle about Vietnam's large trade surplus with the US, that'll be an issue for Vietnam.
Yeah.
But Pakistan, Bangladesh, Sri Lanka will be like number 35 in terms of trade surplus or trade deficit with the US. It's not even on his radar. It'll be like a small blip on his radar.
Yeah. So I think from that perspective, they're insular to that narrative, which could cause uncertainty in your investments, which I think is quite attractive.
Exactly. So that's why I'm also.
And these are massive economies, as you mentioned earlier, 100 million people, 250 million people in Pakistan. Yeah.
Similar to India, right? India also, from an investment case, irrespective of what happens between China and the US or what Trump does with respect to trade, it's a very large domestic. It's a more domestic-driven story. Even their exports as a percent of GDP is less than 20%.
Yeah.
So it's not like even if Trump does put tariffs on Indian exports, or if there's some noise about India's exports to the US or something along those lines, it's not a game changer compared to, say, a Vietnam or a Thailand or China, of course. Yeah. And same thing for Bangladesh, Pakistan, Sri Lanka. They're more domestic-focused economies. And even though exports, US is a very important export market, it's not a large percent of GDP. So if it does slow down, it's not the end of the world for them. Yeah.
So you've been running the fund with Thomas for about 12 years now, and it's still growing. Of all of the strategies, I have to say that as a fund manager, as a PM, this has got to be one of the toughest.
Yeah,
Just from the market dynamics, the size, the asset class, the liquidity, the access to information, although that has changed a lot. I guess kind of like to wrap things up, when you look back, on your early life as a fund manager, what would you do differently knowing what you know now?
Yeah, I think getting a better grip on some of the macro drivers for these economies. But that's the key, like I mentioned, right? The companies are fine. The companies are great, very well run. But sometimes the macro swings could be pretty hard. But that comes experience. So I think now I know what to look for, say, for example, Pakistan's case. It's very clear. When the current account deficit starts bloating up, that's the time to kind of rethink about your Pakistan exposure, because interest rates could increase, your currency could devalue.
Right.
In the previous cycles, I think lack of experience or didn't know how those cycles worked kind of caught me off guard.
Yeah, it's not like there are a lot of other fund managers in the region that you can model after or get mentorship from about the region. You kind of have to build it from scratch.
Yeah, so that's the good part, right? So you do all the hard work and then you know how to kind of manage it the next time it comes about. Yeah, so that's, I think, getting a better grip on the politics and macro factors driving these economies is much more important now. Because the companies, I think, like I mentioned, are very well run. So in hindsight, I think having a better grip on macro would be more beneficial going forward.
Which I think it's ironic because we're seeing what more and more investors are demanding from fundamental managers is that they take on more of a macro approach because the world is just so macro right now. And if you just only focus on fundamental bottom up, you end up getting pushed around by the macro themes very easily, as been proven in the last 5 years during the interest rate regime change.
I think also in line with macro as well, which is very interrelated now, is geopolitics. It's both interrelated now, right? Especially with China and the US, what's going on over there. Some countries like Vietnam are benefiting, but they could also face some pressure going forward once you have a new president in the US, right? Which is kind of anti-trade or focuses on countries which have a large trade surplus with the US. So if you don't have a kind of good grip on those geopolitical factors, Russia, Ukraine, what's going on there, Middle East, what's going on there, how it could reshape the region and how it could affect with the oil prices, etc. I think it's very important. I think going forward, any investor who's looking at various markets, I think should have a good grip on not just macro but also geopolitics, because that's going to get more and more important if you take like a 10-15 year view from now.
Okay, well, thank you very much for coming by. It's fascinating. And I think you have an exciting half a decade to come if it's going to replicate, or as I said, we've seen this story happen in Asia, now in the frontier market. So good luck in 2025, and we'll catch you on the next one.
Yeah, thanks for having me. So like I said, I'm very positive on our markets. They were a good, strong 2 years. But like I said, the cycle has turned for our markets from macro and political perspective. So I think especially for Bangladesh, Pakistan, Sri Lanka, 2025 and even beyond should be a pretty good time.
All right. Great. Thank you.
Great. Thanks for having me. Thank you.